Hello, folks, and welcome back to another edition of the Crypto Byte, joined here with Monty. Last week, we talked a lot about the concept of an echo bubble, not only in Bitcoin, but also in the U.S. equity markets. Ever since we've seen quite an increase in prices. Bitcoin went up to a high of roughly 24,200, but now has backed down and lost a little bit of momentum. So we're going to talk about the recent pullback and more. Monty, would you like to start us off with like some technicals? We've been looking at Bitcoin at very specific levels. Do you want to start here with the 20 smooth moving average?
Yeah, CJ, one great thing about Bitcoin and trading in general is that it's a lot like history in the sense that it tends to repeat itself, and patterns that have shown themselves in the past tend to reappear in the future. And we're definitely seeing that right now with Bitcoin. What we're seeing now is very reminiscent of 2019. We saw a surprise move to the upside. The RSI continually testing down to 50 and bouncing from that level. And we trended up for a good, how long did we trend up during that time in 2019?
Only a couple months. That's another point about the echo bubbles, is that they happen in a very quick period of time. So the clock is ticking. I think we'll be done or topped out in terms of Bitcoin by April, if not potentially sooner. But like you said, in 2019 here, a lot of good instances of where we came back down to the 50 level, where kind of bullish momentum had to reset. That was a really good level to buy at historically. So what's interesting to me is now we're coming up against the 50 level on the RSI, very close to it in Bitcoin in our current trend. We haven't bounced from that level yet, but I think it could be an interesting place to kind of reload things like BITO calls or Bitcoin futures going into like the month of March. I think February is probably going to be a little bit more choppy, but is there any like options trades you're specifically looked at?
Yeah, I'm with you on those BITO calls. I think that, like I said, history tends to repeat itself, and the same is true with Bitcoin. It's a very cyclical asset in the way it moves. And also just the psychology of the traders hasn't changed much since then. But I would say that, we have a few more months of potential positive price action in both the U.S. equities and in Bitcoin. Therefore, I'm looking out to about March 31st as a date where I would start to consider, taking some profit. That's when an echo bubble typically will have run its course. That's what we saw in 2019. And I'll look for a break in those things that we talked about, things like the 20-period smooth moving average. If you're a day trader or just even an investor, I implore you to try to use the 20-period smooth moving average. It's great during trending markets, and we have certainly been in a trending market.
Let me ask you this.
Yeah.
How have you looked at and used the 20 smooth moving average when looking at the DXY? First of all, let's talk about the DXY and its importance and confluence with Bitcoin right now.
Yes, super important. The DXY, as we record this, is dictating a lot of the market's price action, in my opinion. And on the way down, it dictated a lot of the market's price action as well. But one thing you'll notice, and this is getting back to that 20-period smooth moving average thing, put it on your chart. Look at the DXY on its way up. Each time we got overextended, we came right back down and retested that level and bounced higher. So that is a level during trending markets where you can expect to find either support or resistance. The DXY has actually been trending down now. So now that same level that was prior support is acting as resistance. And we're seeing that very much be the case. Yesterday we came up and tested that level and are getting rejected, and that was reflected in negative price action in the equity markets. So it's interesting, CJ. The 20-period smooth moving average in conjunction with the RSI, I think, has been one of the most accurate indicators. I love looking for that sort of confluence between the technicals, and those two together, specifically for the DXY and Bitcoin, I think have been great predictors of like where to reload or where to, take some profit.
Yeah, we are approaching critical levels, so that is pretty interesting. Have not seen a reversal in the trend yet, though, however. One other metric that I want to talk about that I think has been very interesting and effective when locating local tops and local bottoms in the equity market is specifically looking at the put to call equity ratio. In other words, like how many puts and calls are there in terms of open interest. So if you can see this chart below, each time this blue line spikes, that is an indication that puts are being bought very heavily relative to the calls open interest within the market. And when we've seen these spikes in the blue line here that go above 1.2 or 1.1, we've seen a local bottom very quickly after the fact. And as you can see, we're not there at all. We're actually in a very bullish posture, which means that this correction potentially could continue. But if we reach that 1.1 or 1.2 level again, where we've seen local bottoms in the equity put to call ratio, that's a level that I'm going to be paying attention to very carefully, and we'll probably looking to get more calls or just longs in general if we hit that level, because I think it's going to be instrumental in both the equity market as well as Bitcoin.
Absolutely. And you need no more evidence than go back to our last episode of the Crypto Byte when we talked about some predictions from the big institutions and banks. They were all overwhelmingly negative for Q1, and that led a lot of retail traders to jump the gun, buy puts, and of course because of that they were forced to capitulate, and we've had a very positive Q1. So just go back and look at the last episode. Retail traders were stacking up with the puts, and that was actually a great sign that we were making a local bottom. So now that we're getting close to that again, perhaps we are getting close to making a local bottom, but I would keep an eye on that put call ratio, because that has been a great indicator of where price is headed.
All right, I want to talk about narratives now. Obviously, AI is the biggest narrative people have been talking about lately. Kind of reminds me of like when we saw the metaverse hype and then that dies and then nobody talks about it. I assume that ChatGPT and AI technology will probably follow a similar path. But in crypto, we've had AI narratives. We've also had like LSD narratives, liquid staking derivatives. Like Lido has been really going parabolic, but I think you're starting to see the end of these particular trends. One asset that has really done well in terms of crypto on its AI narrative is Fetch AI. So looks like we've peaked at 60 cents. I mean, do you think it's time to think about, I wouldn't be long this. I mean, do you think about the AI narrative dying down and maybe shorting some of those?
Yeah, I absolutely think about it. But one thing that I have learned as a crypto trader and trading around narratives for years, right? We've talked about all these various narratives. You mentioned the metaverse, and trading around it is, and this is a classic quote: the market can remain irrational longer than you can remain solvent. So yes, AI may be a fad, but it can continue for a long time. And especially in crypto, where you have people trying to fade these narratives, stacking up with the leveraged shorts, then you get liquidations that just drives price higher. So I'm waiting on this one. The AI narrative still seems to be alive. And for the time being, I don't want to get in the way of Fetch. It's kind of like the opposite of catching a falling knife. Trying to short this one into, fading that narrative, that AI narrative is tricky because it can continue for a while. And it seems like people are still kind of banking on AI and trading kind of being the future of, markets. So I don't know. I'm not looking to long it here, but also very reluctant to short it because I've seen irrational pumps like this in the past, and they can continue to run for a lot longer than you might think.
It's already ran for so long. All we hear about. The thing that's interesting, and you mentioned how these things can go on for a long time. It's interesting to try to gauge the momentum and see where we are in the cycle. I think since we've had experience trading these alt cycles, it's very important to understand when these pumps are starting to get faded very quickly on narratives. So a really good example that I have here on the chart is Near Protocol. This spike that they had a couple days back was just them talking about an AI integration or an AI announcement. Nothing substantial or deliverable, yet to announce something and to be part of that narrative just to pump their coin, you've seen a lot of projects do that. And typically when the market is strong and there's still a lot of capital willing to ape into these projects, you'll see continuation. But within 2 hours after that news announcement, the move was virtually, it round tripped, it was faded. So you're already starting to see like a slowdown in momentum of the altcoins. I think for the last 2 weeks, the altcoin total market cap has not gone up. So in other words, it's just been, basically trades getting recycled and capital rotations. Mm-hmm. So that is a bit concerning, but I think it just bodes to the fact that I think we're like 6th, 7th inning in this echo bubble, and then we'll probably continue a macro downtrend.
Yeah, so what are you looking at in terms of like upside targets? We're talking about end of Q1, March 31st. What price are you looking at for Bitcoin to be at around that time to confirm the end of this echo bubble thesis?
It's tricky. I would say I would be offloading everything above 28K. Doesn't mean we can't go to 30 or 35 or even 40 for that matter. But the reason why I've dialed it back a little bit in recent times and I have less exposure is because, we've seen tons of speculation in the altcoins. We've seen a lot of capital come into things like Phantom, Aptos, Optimism, Lido, the list goes on. And we didn't have that in 2019. Virtually all the capital was a vacuum into Bitcoin. And you saw Bitcoin dominance go up. You saw Bitcoin go, straight to 4 to 6 to 8 to 14K, and Ethereum very much was just lagging the whole time. So I asked myself, okay, if there's a limited amount of capital that's coming in the space or being recycled around the space, and it's already being deployed in altcoins, is it going to go back into Bitcoin, or is it already missed the boat? Does it kind of make sense?
Yeah, that absolutely makes sense, and I think that just has to do with the fact that I think sometimes we as U.S. traders overlook the importance of Asia and the role that they play in this market, but they play an incredibly important role, especially when it comes to speculating into altcoins. You see it a lot. Look at the volume that Binance does in perpetual futures in terms of their altcoin exchange. It's incredible. They are speculating into the alts. So yeah, I agree that right now we are seeing speculation into the alts that could have something to do with the fact that, you have things like the Kospi, the Nikkei, the Hang Seng Index, all have been performing pretty well, showing signs of a V-shaped recovery. And I think allowing some of these, Eastern traders room to speculate. And I think all that capital will flow back into Bitcoin eventually, and that will mark the top. Then eventually we'll get some altcoin speculation, some wild, crazy altcoin moves that we typically get when Bitcoin tops. But I agree with you that around 28K is a feasible target for end of quarter and would line up with what we've seen in previous echo bubbles.
2 more things I want to talk about. I'll talk about the BITO options in just a moment, but we've had long exposure. Price has gone down from 24 to 22K roughly. Mm-hmm. How do you like to hedge, or what do you think is a good option to hedge if you still have long exposure during a correction of the echo bubble?
Yeah, that's an interesting question because it's kind of a counterintuitive answer. And if you ask a risk manager, they would say that that's not a proper hedge. But what I like to do is actually short Coinbase, buy Coinbase puts. Even though Bitcoin and Coinbase are highly correlated, the times in which we see Bitcoin move the most tends to be during liquidations. Whether it's a flash crash or a sharp move up, it's during liquidations. That's something that doesn't affect Coinbase. Coinbase doesn't have perpetual futures. Of course, they have options being traded, but not perpetual futures. So we've actually seen divergences between Bitcoin and Coinbase, like today. Coinbase is down tremendously while Bitcoin's hanging in there. That has to do with the perpetual futures and also the role that Asia plays. They're not speculating into Coinbase. That's mostly Western speculators that are trading, stocks that are in the Qs and in the S&P. So again, that's another thing that I think Bitcoin has going for it, and that you can use, that allows you to use Coinbase puts as a hedge, is the fact that 1, perpetual futures are playing a huge role in this market, and 2, so is Asia. Those are 2 variables that don't affect Coinbase, and thus I think makes it a valid hedge for your long Bitcoin position.
Nice, yeah. The long Bitcoin position I have is still March 31st, the 1618 call spread. So being able to hedge that out in the interim, whether it be through shorting altcoins like Aptos or Phantom or, hedging some downside with puts in Bitcoin-related companies. I think that's definitely a nice strategy. Anyways, if you guys would like to learn more, feel free to check out our service below at marketrebellion.com/try-crypto. Not only do we discuss crypto trade ideas, but we've been trading a lot of FX lately. There's been Aussie dollar trade and dollar yen trade that have been quite interesting lately, as well as many macro equities and so on. So without further ado, thanks, Monty, and take care, everyone.